Economists are warning the Reserve Bank will still need to raise interest rates in the coming months, despite much lower than expected inflation figures. The consumer price index rose 5.6% in the 12 months to May, but that was a drop from 1.2% from its April rate of 6.8%. But there are still underlying pressures out there. If you take away fruit and veggies, if you take away fuel, then the drop wasn't as significant. There's some important context there. After announcing a budget surplus was stronger than expected, Treasurer Jim Chalmers says he is now open to the idea of cost of living relief handouts.
By getting the budget in much better nick than what we inherited, it means we can provide that $15 billion in cost of living help to take some of the edge off these pressures without adding to inflation, at the same time as we invest in the future. And we've been able to do that because we're banking such a big part of these revenue upgrades which we're seeing in the budget.
Wasn't getting into specifics though. The opposition meanwhile says the Treasurer needs to focus on directing its newly increased surplus on decreasing inflation.
The government needs to do everything they can to help Australians with cost of living, but the best thing they could do is get inflation under control, and they've frankly shown very little interest in that task. They seem to think that that's the Reserve Bank's job and not their job, because they've added $185 billion of extra spending since they came to office, and every single one of those dollars contributes to higher inflation and higher cost of living.